Manish Chaudhary, Head of Research at Stocksbox on the fundamentals, and Aditya Arora, Founder and Multi-Asset Research Analyst, Adlatech.in on the technicals. Welcome to the show, gentlemen.
Thank you. Good evening.
Happy Holi to you.
Happy Holi, happy Holi. And now let's get straight to the query on the show. First, Syam has written to us from Andhra Pradesh saying that he's holding BEML shares at the rate of 21 shares at the rate of 3,500, and he's looking for an option to exit in 6 months. So he's technically looking for a technical view. So Bharat Electronics has received, Aditya, the company has received 2,463 crores order from Indian Air Force recently for supply and services of Ashwini radars. So, do you see it as a positive for the company?
Yes, I think the news flow is positive, and today the stock also reacted positively. Even though market was negative, but the stock has shown clear-cut outperformance. And in the medium term also, the stock has approached its long-term support of 2,300 odd levels. So until 2,300 is protected, stock is trying to form a base and consolidate and then move up. So he must watch out for 2,300 as a support for this counter. Until that holds, there's scope for recovery in the market and in this stock.
Manish, what do you have to say on the counter for the long-term view?
I think I am positive on this counter at the current price. I feel the valuation have come down to a reasonable valuation, and the kind of collaboration it has done recently with an Italian company for the coaches and all, the metro coaches and all. So I think the order book and the different segments it operates in, be it the mining equipment, be it the metros, be it the defense side of the business. I think overall the outlook looks good to me, and if someone is willing to hold it from a 1 year perspective at least, I think the current price is very lucrative.
Both our experts on the technical and fundamental front are positive on BEML. Now, we have another WhatsApp query. So, Anand Vardhan has written to us from Andhra Pradesh saying that he's bought Sandur Manganese at 440 and he has 50 shares. So, whether he should hold or exit. Now, Sandur corrected 40% from its highs, and recently the company CEO has resigned, which has impacted the stock. So Aditya, what are the charts suggesting for the company?
So if we study the stock technically, then technically the stock is making higher high, higher low pattern, and it's trading at price of September 2024. So not much damage has happened technically to this counter. And most of the times the stock is rising on higher volume. So I construe that as a positive sign and positive development in this counter. I maintain positive bias in this counter, and I see that the stock could again hit its new 52-week high of 600 and 650 odd levels. So I remain constructive on metal sector, and specifically this counter with stop loss of 360.
And Manish, are you also optimistic on Sandur for long term?
I think yes. I think Sandur Manganese is into the production of manganese and its ore, which is basically used in the steel making process. I think the kind of traction we have seen recently in the ferrous space, I think this counter looks good to me. And also its close competitor, MOIL, has recently increased the manganese ore prices. So I think the overall, the price scenario for manganese also is improving, and I expect the volumes also to pick up in line with the increasing demand for steel domestically. So I feel the Sandur Manganese, again from a 1 year perspective, looks good to me.
Manish and Aditya, we have a big breaking coming in, but stay with us. It's an NDTV Profit impact. IndusInd Bank stock is placed under ACM1 by Sebi to closely monitor the stock. This comes after NDTV Profit exposed about 80% shareholding sold by CEO, Deputy CEO 3 months before stock collapse. Now, Vishwanath Nair is joining us with more details. Vishwanath, please take us through these developments.
Right. So what has happened is that the exchanges have put the IndusInd Bank shares under ASM-1, which is the additional surveillance measure that the exchanges have. It's a protocol put in place to protect retail investors from investing in stocks because of negative news.
Right.
Essentially, under these rules, the shares cannot be pledged for any loan. You could also be subject to stricter scrutiny so that no speculative trading can happen as a collateral. And this is an important sort of development as far as IndusInd Bank is concerned, because of course over the last 2-3 days you've seen a lot of negative news coming in from IndusInd Bank. It started actually Friday last week when the Reserve Bank of India only gave a shorter extension to CEO Sumant Katpalia, only about a year, even though the board of the bank had sought 3 years. Then again on Monday, the bank came out with its own clarification saying that it had found certain discrepancies in its derivative portfolio, because of which there would be an impact which is the equivalent of 2.35% of net worth, or roughly about 1,500 to 2,000 odd crore. Since then, of course, there have been a lot of questions raised, and NDTV Profit has been upfront in raising these questions around IndusInd Bank. The kind of disclosures that they've done actually open up far more questions, because a lot of it is still unanswered. Just a little earlier today, we reported, of course, that the market regulator Sebi is looking into this matter because they feel that IndusInd Bank might have flouted accounting rules. They're also questioning the sale of shares by the CEO and the deputy CEO, over the course of 6 months last year, and that is why you're seeing such action by the exchanges that's coming in today.
Vishy. And also, since NDTV Profit has been tracking it since day one, so I would like you to, take our viewers through what all has been happening, and now finally, they have come up with this big news. So what do you have to say?
So, Himanshu, what started off as a disclosure to the market about a sizable impact on the IndusInd Bank balance sheet, where the bank said that its Q4 numbers are going to get impacted simply because of some accounting discrepancies in its derivatives portfolio. Since then, of course, a lot has happened. You've seen in the IndusInd Bank shares drop close to 30% on Tuesday morning. And then on Wednesday again, we reported that there have been, Reserve Bank of India has taken this issue up. It has reached out to all the other large banks in the ecosystem, private and public, trying to find out where their derivatives position is and whether there are similar issues in other banks or not. Of course, our sources are telling us that this is most likely localized within IndusInd Bank, but of course we'll see if any other banks come up. But since then, NDTV Profit has also broken the story about the sale of shares by the CEO and the deputy CEO. As of June 2024, nearly 80% of their holdings they sold in the market, and these were sold at a price which was very close to the peak price of 15.67 per share. That was a peak price, and the sale of these shares happened at 15.24. Since then, you've seen the shares nosedive and lose much of that value. Apart from that, of course, as I said a little earlier today, we reported that Sebi had taken this action. Sebi is likely to take some action. They're actually looking at the case and trying to see if there were any violations of existing norms, specifically of accounting principles, if there were issues linked to the timing of the sale of shares, and if that is questionable. All of these issues, of course, still are unresolved. The regulators are looking at it, and we'll probably find out the reality of the matter in weeks to come.
Absolutely, Vishy. And also, day before yesterday when this came out, the profit was hit over 27%. Now, it'll be very interesting to see that, since the market will be open on Monday, so how it's going to impact. What do you have to say on that front?
I mean, I don't want to guess how the share price is going to move. Of course, you've seen a lot of big hit on the share prices. Remember that under ASM-1, again, you will see that some of the volumes do slow down under these shares. So you may not see a relatively large sort of move on the stock. However, this is definitely negative news for IndusInd Bank, and this will weigh heavy on the management because now, at some point in April, they will also have to come out and submit the financial results for the fourth quarter of this financial year. The management of the bank has been very vocal in saying that we will report a profit in Q4. We need to see whether that turns out to be correct. Remember that in the past, whenever Sumant Katpalia has said that issues are getting resolved and things will look better, things have actually not turned that well. So yeah, a lot of this clarity will emerge in weeks to come. But for now, you may not see an outsized reaction in the market on Monday, but you will see some impact, of course.
Vishy, you please stay with us. I'd also like a view on, on this by our fundamental guest, Manish. It's a big development there. What is your outlook, on this? Because IndusInd Bank's, since this news has come up, it has been a bit shaky. So what do you have to say on this front?
I think my view since the last 2 quarters has been on a cautious side on IndusInd Bank, primarily due to the kind of provisioning the bank has been doing in the Q2 and Q3. Overall, banking space did not do as much provisions as the IndusInd Bank did. And with the kind of regulatory negative developments which have happened in the last 1 week or so, I think now the worms are out, and I feel it is better to stay away from the counter because we still do not know what kind of more accounting discrepancies we would see going ahead. So this sentiment overall has become a little sore on the counter. And I feel that in the Q2 and the Q3, the bank reported around 1,300 to 1,400 crores of profit. And with the kind of discrepancy in the derivative portfolio which it has, I would not be surprised if in the Q4, the bank puts a overall net loss, which would again be weigh heavily on the counter. So I feel it is better to stay away from the counter. And if someone is holding this counter, I would advise to book the loss and move away from the counter.
All right, so that's a strong view coming in for the fundamentals, those who are invested there. And Vishy, if you're there on the line, so are IndusInd Bank savings and deposits safe?
Yes, Himashi, there's absolutely no reason for depositors to worry about this entire matter. Of course, questions are being raised on the management's action and the kind of disclosures that they've done. These are all regulatory sort of overhang on the bank, but at no point in time is IndusInd Bank's financial position in jeopardy at all. So let's make this clear for everybody, including people in the newsroom, that there's absolutely no need to be afraid of what will happen to your deposits in IndusInd Bank. Those continue to remain safe. Remember that in the recent past, wherever the RBI has taken such actions, where deposits have been locked in a bank for a short period of time, those have all happened only when the financial position of the bank is in dire straits, is in a position where the bank cannot function normally. That situation has not come up in IndusInd Bank at all. All we know is that there were certain transactions that occurred which should not have occurred. Maybe there are flouting of certain rules that is happening in IndusInd Bank, but its financial position is safe. Depositors absolutely do not need to worry. I just want to make that categorically clear to all our viewers.
Right. And Vishy, for normal retail investors, for like you and me, what does this mean? Obviously, when they're going to learn about this, they're going to get a bit jittery. So what do you have to say, on that front?
Well, you've got registered investment advisors out there who advise you on what to do with your stock. So I would request all the investors to talk to these registered investment advisors. They are the only people qualified to give you opinion on what to do with your stock. So talk to your advisors and see what you want to do with it. Depending on your risk appetite, depending on the amount that you've invested, and depending on your investment horizon. As of now, yes, there are clear issues. There are regulatory concerns as far as IndusInd Bank is concerned. There is a management overhang that is active. These are all fact and which are currently playing out in front of you. What you need to do with your stock is something that you really need to talk to your registered investment advisor about.
Right, absolutely. We'll get there also. We'll get their opinion on it. But I think Harsh is also joining us. Harsh, are you there on the line?
Yes, I can hear you, Ramakshi.
Yes, so, we've seen that RBI Finance Ministry now, taking notice of IndusInd Bank after NDTV Profit broke the story. So, what happens next, Harsh?
Well, more restrictions on the stock, and I also believe there's an ASM which has been initiated, which means that all transactions will have to be done at 100% margin. Speculative trading will reduce on the stock, therefore. Genuine buyers will likely move in if there are any. And what it will also mean is that there will be stronger tracking and surveillance of who is buying and selling the stock. So plenty of monitoring likely to happen as a result of this ASM framework being implemented on IndusInd Bank. Also, your price bands will be capped at 5%. So less volatility, more awareness for investors, and clearer monitoring of who is buying and selling the stock. So yes, that's what will likely translate.
All right, and since we have been tracking this since day one, and the discrepancies we've reported it on the forefront, but and this finally, SEBI is taking notice of it. Harsh, what do you have to say on this entire journey? The stock has seen the crashing, then yesterday it kind of rebounded, but now it's in a tight spot. So what do you have to say on that front?
Well, I believe it's well deserved because of everything that's happening. I mean, the disclosures have been poor. They have not been forthcoming with regard to issues and financial irregularities. And therefore, I believe this is a welcome step to protect investors. That being said, what really is the question is, what happens to the investor wealth which is already eroded? 60% is what investors have suffered in terms of losses. Nearly 60,000 crore worth market cap wiped out. And for investors are sitting on very, very strong losses. Now, of course, this measure should hopefully make investors wary of everything that's happening in the stock, as well as reduce any kind of speculation that's also been happening on the stock. So I think it's a welcome step, and I think closer monitoring of who's selling, who's buying, and how much, I think is necessary.
All right. Thank you for bringing those details there, Harsh and Vishy. It's a big NDTV Profit's impact on the story. Now, thank you so much for being there on the line. Now, I'd like to go back to my guests. Manish, coming to you, on this story itself, the investor sentiment will be a bit jittery on Monday. Yesterday, although, the stock saw, bounce back, but today again, after this big move on Monday, it will be a very, very, close watch on the stock. So what do you have to say on that front?
I think, yes, I think the investor sentiment has got hammered. And I think everyone is now questioning whether this accounting discrepancy is just limited to the derivative portfolio, or are we waiting to see some more accounting discrepancies coming in the next few weeks or few months? So I think the overall sentiment overhang will remain on this stock. And I think it is better to avoid this. And I think we would not be surprised to see further regulatory actions, further strictness from the regulators on this, considering to protect the investor interest in this overall scenario which has happened in the last 1 week or so.
So, viewers, for you and me who are, investing in the stock, so our experts are also suggesting caution now. And those who have already, invested in this particular counter may actually book your profits or losses, whatever you're incurring right now is what our experts are suggesting. Now, let's go back to the show and proceed further. Now, John has written to us from Puducherry, saying that he's bought 235 shares of South Indian Bank at an average price of 27.40. And he's bought this over a period of year. Now, should he add more at the current price? And what is the growth of this bank in the future? Should he be holding this counter for another 2 years? So, the charts, if I look at the charts, are pretty topsy-turvy, and the company has been underperforming lately. So, Manish, on the fundamental side, do you see any further correction or a bounce back in this counter?
I think South Indian Bank has not delivered the kind of returns it should have for the shareholders, and it has been mostly range bound, and the profitability also, if you see, has been a little flattish if you see for the past few quarters. I think there are better counters in that banking space, and I feel the viewers should exit this counter and move into something like a federal bank where there is a earnings visibility, and also where we are confident about the return on assets going ahead in the next 1 to 2 years under the new management, Mr. Manian sir. So I think Federal Bank looks good to us, and exit South Indian and enter into Federal Bank.
Right. So exit South Indian Bank and buy Federal Bank instead is what Manish is suggesting on the fundamental front. But Aditya, I'd also come to you on the technical side. How is South Indian Bank faring on the charts? Are you optimistic on this counter?
I think the stock has been underperforming for a while, as you rightly said, and consolidating in a broad range. So I would technically wait for a breakout, which would happen above 27.5, which is a little higher than the current price. But over there would be a lot of certainty about the trajectory of the stock. Right now, it's consolidating and closing towards the lower range of the technical range. So I would wait for a breakout about 28. Over there, I think the stock would attempt a proper breakout, and then it could start its upward journey. Otherwise, right now, the stock is in a void.
All right. So there's an avoid from both the technical and fundamental side. With that, we have a first caller on the show. Hi, Venkatesh. Venkatesh, am I audible?
Yeah.
Yes, Venkatesh. Please go ahead with your query.
Yeah. As per your expert advised me to wait to average on Zomato. At the rate of it will come around 200 or 205. So
Okay.
now it is today it is around 200.
Yes.
So I wish to know that shall I average it now, or should I hold it, or should I sell it?
Okay. So how many shares have you bought in total?
In total, I have 1,200 shares.
Okay, 1,200 shares you've already bought. And at what price?
263.
263. All right. So, and when did you buy it exactly?
This I bought around the Q3 result.
Okay,
Before Q3 result, I bought this.
Because you're sitting on a significant loss of 74,000 there is what I can see. I'll get you, your query answered by Manish. Talking about the fundamentals of the company, Manish, mostly we have catered to Zomato and Swiggy, often on our show. So, but still, what do you have to say? Fundamentally, do you see it as a strong company? And since Venkatesh is sitting on a very heavy loss there, so what do you have? What suggestion do you have for him?
I think the counter has corrected from around 300 odd levels to around 200 levels. I think the primary two reasons I can think of is, one is the overall market sentiment has weighed on the stock, and secondly, the third quarter earnings, I think the profitability got impacted due to the huge expansion for its Blinkit business. But I feel that if someone is willing to hold this counter for a longer term, I feel the Blinkit business, the food delivery business, the newly acquired ticketing business, and also the B2B hyper pure business. I think these four segments together have a big total addressable market, and I do not feel that going forward the earnings trajectory would not improve. The third quarter earnings for me was a blip because of the huge capex which happened for the Blinkit business. But again, my view on Zomato at 200 levels is positive, and I believe that if someone is willing to hold it for a longer term, this is a good price to buy.
All right. So quite an optimistic view on Zomato, on the fundamental front. But Aditya, talking about the technical, how is it faring on the charts? Are you also optimistic on the counter?
Technically, the stock is making lower high, lower low pattern and trading below important moving average. So I feel that technically now it's on little slippery ground. And second, a lot of competition is coming in picture. So that also adds little bit to the uncertainty. So technically, I feel let the dust settle down. Otherwise, I think it's an avoid, and probably the stock is on a shaky ground. So I feel it's a little neutral to bearish counter as of now.
Okay, thanks for that view, Aditya. Now with that, viewers will have to slip into a short break. Keep sending in your queries on WhatsApp and call in. We'll be right back for Ask Profit. Stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every
Welcome back. You're watching Ask Profit on NDTV Profit. And viewers, to solve your stock-related queries, we are joined by Manish Chaudhary on the fundamentals and Aditya Arora on the technicals. So what are you waiting for? Please pick up your phones and call us right away and get your queries answered. Now, with that, we have a caller who's calling us from Chandigarh. Hi, Rahul. Good evening.
Good evening, ma'am.
Yes, how can we help you, Rahul?
Ma'am, I have a query regarding Zee Entertainment.
Zee Entertainment, okay.
Yes, I have 200 shares at ₹100 price. And I want to ask if, there's a long-term perspective to hold the stock and maybe buy more at this time, or, if I need to exit.
Okay, and why, and if I may ask that, why did you go for Zee Entertainment, in the very first place?
Ma'am, couple of things. One was when I looked at the fundamentals for this, the overall net profit increased quarter-on-quarter in 2024.
Yeah.
And the P/E ratio was also, looking nice to me. So that's the reason I went ahead with it.
Okay. So I'll get your query answered. Manish, coming to you. Since January, if I can see, so the stock is witnessing a fall. But still, are you optimistic on this company for long term? And do you suggest, our caller to stay invested in it?
I think Zee Entertainment is a typical turnaround kind of a story if someone wants to play this counter. I think in the third quarter earnings, I think it was very clear that the numbers, the profitability got impacted mainly due to the lower advertisement revenue for the company. But I think from the fourth quarter, that is from January onwards, with the kind of rural demand coming in and with the kind of FMCG commentary we have seen, wherein the focus has been more on the increasing the advertisement and the promotion spend to boost up the urban consumption as well as the rural consumption. I feel Zee Entertainment from here on, I think the earnings trajectory should improve mainly on the back of higher advertisement revenue, which would come. So I think it's a typical turnaround kind of a story, and one has to wait for at least 2 years to make some meaningful gains out of this counter. At the current level, I feel it's a hold for me.
Right. Thanks for that view, Manish. With that, we have a caller from Bengaluru. Hi, Sanjay. Good evening. Thanks for calling in.
Hi, ma'am. Good evening, ma'am.
Good evening. Please go ahead with your query.
Ma'am, KPI Green Energy stock.
Yes.
300 stock. Average price of 400. Short term 6 month, ma'am. Extra share buy, ma'am. Sell, ma'am.
All right. So Aditya, quickly coming to you on the technical front, KPI Green, what's your take on the company?
I think stock made a good attempt of recovery from 316 odd levels to 486. I wouldn't suggest to buy more because there's a lot of volatility in the market, and this stock is also displaying great amount of volatility from 316 to 480 and from 480 to 370 again. So not a good idea to add more. Currently, it's just wait and watch because stock is taking support from its important medium-term support zone. So right now, it's a wait and watch right now. Wait for a breakout, and breakout may happen above 480 when there could be good momentum returning in the stock back again. So right now, it's hold.
All right, so that's a hold and wait and watch on KPI Green is what Aditya is suggesting. With that, we have a caller from Bengaluru. Hi, Krishna.
Yeah, I have 110 shares of RVNL. Okay, I bought it at 150 rupees.
Right.
So I have profit of 20k at the moment.
Yes.
Should I hold because the railway shares outlook now it is not going up like last year. So what is the outlook for RVNL and other railway shares like IRFC like that?
Right. And when did you buy it exactly?
That is last year beginning. That is 2024 beginning time.
Okay. So in just 1 year, you have made a profit of almost 20,000. There is what I can see. So kudos to you on that front. But when you initially invested in the stock, were you looking to hold this counter for 2 to 3 years?
Yeah, 3 years. But off late, if you see from last year, October, November onwards, it's going down. So, what is the outlook?
Okay, so Manish, what's your suggestion to Krishna, who is holding RVNL, since last year and is sitting on a profit of 20,000 there? So, what do you have to say to him?
I think the overall railway space, the kind of run up it had seen in the last 1.5 to 2 years, mainly on the back of the robust order book which all these players had. I think most of the positives are seemingly priced in. With the kind of correction which has happened from the top, I think the valuation for some of the counters like RVNL, IRFC are still above the comfort zone. And I believe that from here onwards, execution would be the key factor to justify the kind of valuations at which these counters are trading. But however, in the last few quarters, we have seen that the execution was not at par with the kind of valuation which all these companies were trading at. So my view is that it is better to book your profit in RVNL, and at the current juncture, I feel that the kind of run-up we have seen in the railway counters in the last 2 years, I think from here on, that kind of run-up looks difficult to me in the overall railway space. And a better place to invest currently would be the banking space, where the valuation are much more attractive. And amongst that, the large cap counter like Kotak Bank looks good to me.
All right, thanks for that view. And, Manish is suggesting that Krishna should book his profits there. With that, we have a caller from Nasik. Hi, Sharath.
Hi, yes, ma'am. Good evening, ma'am.
Good evening.
I got 100 shares of Adani Total Gas at the average of 660.
Okay.
With the aim of short-term gain. What will be your advice, ma'am?
Okay, so Aditya, Adani Total Gas currently trading at 604. Sharath had bought it at 660. So do you see, the stock reaching these levels in the short term soon?
I think most of the Adani Group stocks are, making good attempt of recovery, and most of them have recovered quite a bit. And same is true for this counter, which recovered from 530 odd levels to 604. And the volume participation is decent. And as it's on path of recovery, I would say that wait and hold is a good strategy over here until 500 is not breached. There's scope for good recovery in this counter.
Okay, so there's a scope of recovery in this counter. With that, just a disclaimer to our viewers, NDTV Profit is a subsidiary of AMG Media Networks, the channel you're watching right now. Now, we have a caller from Hyderabad. Hi, Anthony. Thanks for calling in.
Hi, ma'am. Hi, how are you doing?
I'm doing very well. Please go ahead with your query.
Yeah, my query is regarding Biocon, the stock Biocon, a quantity of 125 at an average price of 392.
Okay.
And I'm looking for an horizon of 2 to 3 years. So should I hold on or should I exit from this stock as of now?
All right, because I can see that you're sitting on a loss of 9,000 there. Currently, it's trading at 323. You bought it at 392. Manish, how are the fundamentals of Biocon looking like? Are you positive on this company?
I think it is one of the few pharma companies in the pharma space into the biosimilars where a lot of innovation and R&D goes into. But somehow I feel the kind of management commentary we have seen in the last few quarters has not translated it into the execution part of the overall business, and that was very visible on the earnings as well. So I feel my view is that it is better to exit Biocon and move into something like a Cipla, where the earnings trajectory looks good to me, because I think the mix of products is both domestic as well as the US, and the earnings visibility and the valuation are much more comfortable than this counter Biocon.
All right. So sell Biocon and buy Cipla instead is what Manish is suggesting to our investors there. With that, we have a caller from Hyderabad. Hi, Anand.
Good evening, madam.
Good evening. Please go ahead with your query.
I have bought 250 shares of Motherson International.
Okay.
At the rate of 200 rupees.
Okay.
Now it is around 123 rupees, madam.
Yes.
Can I sell or can I average it?
Okay, and are you a long-term investor or short-term investor?
Medium term, madam. Medium term.
Medium term. Okay.
Regarding Motherson, which is a very good automobile parts company.
Yes.
It is a top rating company. That's why I have bought, but it is now I have around 40% I am making loss.
Yes, yes. I can see that. You're sitting on a loss of almost 20,000 there. Aditya, coming to you, if I look at the charts, so since October, the stock has seen a downward trend. And if I can see that from January also, it has seen a very sharp fall. So what do you have to say? Do you suggest Anand to book his losses, or should he be staying invested in it? And do you see any positive momentum there for in the coming future?
I think the stock may take time to recover as it has fallen significantly from 210 odd levels to 120. This is basically institutional selling. So in such a case, the recoveries are not very significant, but little shallow. So I would say that it's a sell on rise candidate. He should look for opportunities to slowly lighten up his position and instead consider other sectors where the scope is good in the medium to long run, as in the short run there are a lot of disruptions in automobile space. And over here the stock has although reached its medium term support level, but as the beating has been very significant, the recovery may also take time. Hence, relative underperformance may persist in this counter. Hence, the idea is to shift in a better sector and better stock.
All right. Thanks for that view, Aditya. And also, thank you for being there on the show with us and, guiding our investors, so patiently. Thank you for being on the show today.
Thank you so much.
Yes. But viewers, we're going to continue with the show with Manish. He'll be answering all your queries, so don't worry about that. We have a caller from New Delhi. Hi, Sanjeev. Good evening.
This side. My query is regarding Castrol India.
Okay.
I want to know what will be the impact of Mr. Trump policy on this share, and second is the petrol prices. What is the impact on this share?
Okay.
What is the future of this share in the next 3 months?
All right. Since our guest on the technical side is not there today, but I'll get your query answered. Manish, coming straight to you. What's your take? If you could take, guide our viewer, in fact, what should he be doing in the next 3 to 4 months with this counter?
I think there's a lot of uncertainty around the automobile space related to the Trump tariff policy. I think it is not very clear how that overall scenario would unfold. So I think there is nothing wrong with this counter. Castrol, I think the numbers have been good. The kind of return ratios the company has delivered in the past has been excellent. And I feel that from a 1 year perspective, I think it's a hold for me. But in the short term, we may see some volatility on account of the news flows which would come surrounding the US tariffs. So I think short-term volatility may persist, but there is nothing wrong with this counter over a 1 year kind of a horizon.
Okay. So I hope your query is answered there, Sanjeev. With that, we have a caller from Hyderabad. Hi, Preetham. Good evening. Preetham, am I audible? Okay, I think we've lost the line there, but Manish, we have his query. Preetham has bought 100 shares of PCBL at 490 a piece, and he is looking for a long-term view on it. Currently, the stock is trading at 373, and he's incurring a loss of almost 12,000 there. Today also, it was down over 2% in trade. So what do you have to say on PCBL?
I think PCBL is, one of the better counters in the carbon black space, and I feel with the overall chemical sector looking to me as if it has bottomed out, and the overall chemical space, the pricing has almost bottomed out, and we would see some pickup in the pricing as well as the volumes going ahead. And I feel that PCBL would also be a beneficiary of this upturn in the overall chemical space. So from a 1 to 2 year perspective, I feel PCBL at the current level is a hold for me.
Right. So PCBL, there's a hold on the company. With that, let's go across to a caller from Chennai. Hi, Shankar. Good evening.
Hello. Good evening.
Yes. How can we help you, Shankar?
Yes. Last week, I bought 2,000 shares of IGL at the rate of 183 rupees.
Right.
In every day, it flight to 188 to 192 levels and came down to 182 to 184 levels. Is any chance to breach the 192 levels? It will breach the 192. What is the target? I am ready to wait till May end. Any chance to fly to 220 or 240 levels? Is it possible?
Okay.
Or I exit the stock. What is your advice?
All right. Manish, what do you have to say to him? Since he's looking for a very short-term view, but still, do you have any suggestions?
I think if I just have a look at the chart, I feel 160 is something where the stop loss should be there. And I feel from here on, my view is in the next 3 months, we would see an upturn in the overall market sentiment and the overall market. So I think IGL would also be a beneficiary of it. So I think it is better to hold this counter considering the overall expected improvement in the market sentiment with the stop loss around 160 levels.
Okay, thanks for that view, Manish. With that, we have a WhatsApp query. So Kiran has written to us from Dubai saying that, is Shaily Engineering Plastics a good buy for long term? And he's looking for a view on it. So currently it's trading at 1804, which is nearly its 52-week high. But today it was down over 2% in trade. The charts are also looking quite promising. So what's your take on Shaily Engineering, Manish?
I'm not tracking this counter, unfortunately, but I feel that with the kind of business it is into, where it provides injection molding, the molding thing to the OEMs, especially to the consumer durable segment. My sense is that with the kind of heat waves which is expected, I feel the short-term view remains positive, because I feel that there would be a change in market sentiment, because a lot of demand due to the heat wave might come for the air conditioning kind of that space, where I think Shaily Engineering also operates. So again, a short-term view remains positive, but I'm not comfortable from a longer-term perspective. And yes, that's my view.
Okay, thanks for that, Manish. We have a caller from Hyderabad now. Hi, Ravi. Good evening. Ravi, am I audible?
Hello.
think yes, Ravi. Please go ahead with your query.
Ravi, I am Ravi.
Hello. I think we've dropped. The line is a bit shaky, but we have his query. So he's bought 520 shares of RailTel at 429, and he's looking whether he should hold or sell. The time horizon he hasn't mentioned, but I can see that he's sitting on a very significant loss of almost 76,000 there. So, talking about RailTel, so it's a Navratna PSU, of government, but currently it's trading at 283. Dropped significantly from what the levels, Ravi had bought. And today also it was down over 2% in trade. So, Manish, what do you have to say on this company?
I think my advice to all of the retail investors is, do not chase momentum stocks, which are the flavors of a year or so. I think most of the retail investors are getting stuck into the PSU space, be it railways, be it the banking, the PSBs, be it the defense. I feel the kind of exorbitant valuations which all these counters had reached, despite the correction, I feel those are still trading at a premium. From here, the only thing which can save all these counters from falling further is the execution. If there is a slight mismatch with the kind of execution which all these counters might have going forward, I think it is better to avoid the railway space at this point in time. And my suggestion would be to book the loss in this counter, because currently also the stock is trading above 30 x P multiple on a PTM basis, which is on the higher side considering it's a PSU stock. So I feel it's better to sell this counter currently.
So avoid railway space, railway sector for now, and book your losses in RailTel if you have invested, is what Manish is suggesting. Now we have another WhatsApp query from Hyderabad. So Vijay has written to us saying that he's bought 1,010 shares of Laurus Labs at 520 apiece. He's looking for a short-term view, but Manish, coming to you, currently it's trading at 574, although the stock was down over 1% today in trade. But, Vijay is sitting on a profit of 55,000 there, almost. So what do you have to say? Are you positive on Laurus Labs for, for the future?
I think Laurus Labs, considering this CDMO space where it operates, I feel with the kind of tariff uncertainty which is going on, everyone is worried about the pharma space. Within the pharma space, I feel this CDMO is the space which would be the least impacted. And Laurus Labs, with the kind of commissioning it is going to happen in the next few quarters, and this CDMO space wherein it operates, I feel the earnings trajectory would improve, and Laurus Lab, from again a longer term perspective, is a hold for me at the current prices.
All right. Thanks for that view, Manish. And also, like you rightly said, that Amit, Trump tariffs, there is a bit of pressure in the pharma sector. So what are your top picks, in this sector?
I feel if you want to play the pharma sector per se, I feel this CDMO space is one of the better space to be in that Allure Life Sciences, which was formerly Landmark Life Sciences, is one of the better play to have. Another, I feel the domestic focused pharma companies would be better, wherein Mankind Pharma looks good to me. So currently, with the kind of uncertainty it is there, it is better to play on the domestic pharma space or this CDMO space and avoid pharma counters which have a significant portion coming in from the US.
Right, right. Thanks for that view, Manish. I'm sure our, the viewers who are watching us right now have benefited from it. We have a caller from Hyderabad now. Vijay is calling us. Vijay, please go ahead with your query. Vijay, am I audible? I think we've lost the line again, but we have his query. So he's bought 100 shares of transformers and rectifiers at 385 apiece. He's also looking for a short-term view on it. Currently, it's trading at 374 and was down over 2% in trade today. Manish, what do you have to say on this particular company? Are you positive?
Yes, I feel Trill on a short-term, medium-term, and long-term. I feel all the time frames, it looks good to me. With this summers kicking in, I feel the peak power demand would break all the records in the past, and I think Trill is one of the play which would benefit with the kind of heat wave which is expected. So this short term looks good to me. From a longer term perspective, I believe that the kind of order book it has and with the kind of efficiency it has shown in the recent quarters, I feel from here on, just the execution of the order book would translate into a good earnings growth. And at the current levels, it's a hold for me for long term as well.
Thanks for that view, Manish. And also, since you rightly said that summers are kicking in, so are there any summer picks from your end for our viewers? Any top three would go.
I think in the overall for this summer space, I feel Varun Beverages looks good to me. That would be the first counter. Second counter, just to play from a short-term perspective, I think Blue Star looks good to me. And the third counter, I would feel that I think NHPC at the current levels again looks good to me from a longer-term perspective, not a short-term perspective.
All right, all right. Thanks for that, Manish. You've already given our viewers a Holi bonanza today. With that, thank you for being on the show and helping our viewers so patiently. Thanks for your time, Manish. It's always a pleasure having you. And viewers, with that, it's a wrap. But stay tuned to NDTV Profit and wishing you all a very, very happy Holi.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure.
Nifty Sensex end another volatile trading session with losses. Both the indices fall over 0.7% for the week. IT index emerges as the worst performer as tariff tensions rise. Pharma financial services ended higher for the second week in a row. It's an NDTV Profit impact. IndusInd Bank shares placed under the short-term additional surveillance measure by Sebi, which means shares cannot be pledged as collaterals for loans and stock, and they will be subject to stricter scrutiny to prevent speculative trading. As tariff wars intensify, US Commerce Secretary hits out at nations slapping retaliatory tariffs, EU and Canada. While also speaking to Bloomberg, he emphasizes that President Trump aims to negotiate with countries like India that limit access to global markets, also noting that India restricts US farmers' products, highlighting the need for improved trade relations. US President Donald Trump now threatens to impose 200% tariffs on wine, champagne and other alcoholic products from France and other EU countries in retaliation against the bloc's planned levies on US-produced whiskey. The Commerce Ministry meeting with Export Promotion Councils concludes without any clarity on tariffs and free trade agreements. The council continues to push for higher exports to meet the $2 trillion target by 2030. Retail traders looking to dabble in futures and options may soon have to prove they are financially and intellectually prepared for the high-risk segment. As sources tell NDTV Profit, the Sebi is considering a suitability exercise to ensure traders are ready before stepping into derivatives trading. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets, but as well as national and international news. In the latest escalation of trade tensions, Donald Trump has threatened to impose a 200% tariff on wines, champagnes and other alcoholic products from France and other EU countries. This move is in response to the EU's decision to impose a 50% tariff on American whiskey, part of a broader retaliation against US tariffs on metals. Now, the EU's countermeasures target $28 billion in US goods, reflecting a significant escalation in the trade conflict. Tensions between the US and the EU are rising, with Trump labeling the EU as one of the most hostile and abusive taxing and tariffing authorities in the world. Meanwhile, US Commerce Secretary Howard Lutnick has emphasized that President Trump aims to negotiate with countries like India that limit access to global markets, while noting that India restricts US farmers' products, highlighting the need for improved trade relations. To put all of this in perspective, I'm being joined by Anurag Singh, Managing Partner, Ansett Capital. Anurag, thank you so much and good morning to you and a good evening from India. First up, we're all waking up to another comment being made by Trump on Truth Social. What is your outlook for the global economy given these trade tensions and potential tariffs? Do you see any signs of a broader economic slowdown or recession emerging from these trade conflicts? This is the question that we're asking almost every evening and every morning.
Yeah. So, Sanjana, good evening and good evening to your viewers as well. So, look, I think it's a difficult question. We are all trying to grapple with it. But look how fast the situation changed. You know, just about a month or two back, US was pretty happy that markets will do great. Capitalism is back. Companies will have less regulations. While all of that might be true, but, here we are where inflation is not a worry now, but we are talking of the R word. So I don't want to still go there, Sanjana, the way I see it, at least in US. I understand US better. But as long as the employment market in US holds, which is pretty good at 4.1% unemployment, it can cool to even 4.23 and nobody would blink an eye. So US economy will continue to do well. That said, all the companies which have declared results after Jan have begun to now say and sound a little cautious on their outlook, which is causing a market correction, right? So what will happen to the global economy? Well, it will become a little more transactional. So Trump's approach is, and we can talk maybe further about this, that his approach is not about US being a big brother and trying to give it to everyone and being a soft target. I mean, it was never a soft target, but trying to be a big brother and be generous. It is more transactional, and it is going to pull all the levers to get its, throw its weight around and get what Trump thinks US deserves in terms of trade.
Absolutely. So then how do you then see India and US's trade relationship evolving in the next year, especially considering the US's push for better market access? What are the key areas where India and the US can actually collaborate to enhance bilateral trade?
So Sanjana, this is a bit of a complex question. So again, people who are engaged in trade can explain this better, right? But I think the big picture that people miss is this. People look at the broad contours of the trade and say, okay, India exports. Look, India is a big exporter to US, all the IT services, everything, and BPOs, they all work for US companies, right? So India exports about 33 billion to US every year. US exports about 25 billion of these services. But by the way, most of these services, about half of it is actually people traveling to US, right? So such is the balance. But be that as it may, services, US doesn't care. Look at the goods. India exports about 85 billion to US, whereas US exports only 45. So there is that 40 billion gap. Now the question US is asking is, by the way, this is kind of 10th in the ranking in terms of US deficit with different countries. So India is at number 10th, which is to say that it's not a big target, but it comes as a mention in the passing. And why it happens is, look at this. We see this average number that, on an average, India tariffs US goods at 10, 11%, whereas US tariffs about 2%. So there is this 8 to 10% gap. Now, this is on the goods which are actually getting transacted. But the problem lies in areas where India has tariffs which are prohibitive. For instance, agri goods, right? If the tariffs are to the extent of 50, 60, 80, 100%, then probably there is no trade. And that's where, that is the logic from Howard Lutnick and Trump, when he repeatedly says, for example, basic things like Harley Davidson, and they've been talking about bourbon whiskey and Harley Davidson, for example, but they are good examples. India tariffs US whiskey at 100%. Now you cannot trade at that, right? It'll become very prohibitively expensive. And by the way, it was at 150. They brought it down to 100% on Trump's behest. But they're saying, look, this is not a joke. You should get it down to 0. So I think those are the thorns, and that's the point on agri products as well. That if an India were to lower those tariffs or actually cut down to 0, then basically there'll be a deluge of US luxury products, and there is enough consumption class in India which wants to have US brands, but they are being prohibitively expensive because of the tariffs. So I think that's the question, and I hope the authorities are trying to resolve this. But it's not going to be an easy negotiation, I can tell you that.
Absolutely. Thank you so much for your insight, and hoping that the rest of the day actually has some better news in store, and we're not waking up to another comment coming in. But thank you so much for your time.
Thank you.
And what a week it was for the markets. Volatile every day. The benchmarks fall 0.7 for the week, mired by global events, and broader market indices underperformed the benchmarks, with mid caps falling 2% for the week and small caps fell 3.5%. Now, speaking of stocks, IndusInd was the biggest laggard, down 28 this week. But what were the other highlights of the week gone by? Let's go to Harsh for more details.
Well, wouldn't say that markets were under pressure, but they clearly closed with sustained weakness. 22,400 broken on the downside, and we had held 22,400 for most part of the day. Just the last 10 to 15 minutes where we saw some bit of weakness. When we look at the intraday chart, we'll see that. And the weakness, it came from banks and auto. Those were the two pockets where we saw quite a bit of weakness right towards the fag end. Let's look at the intraday chart on banks and thereafter on auto. There you go. So absolutely flat move on banks when for a predominant part of the day, we were in the green. The auto index sunk to the day's low and we closed at the day's low 1.1% lower on the Nifty Auto. I also want to highlight the Nifty IT index because what's happened there has been fascinating through this week. That one though didn't close at the day's low, just off the day's lows, but 0.5% lower nonetheless, on top of the move that we've seen pretty much through the week on the IT index. And let's pull up the weekly chart on the IT index because it was the top sectoral loser in trade this week, 4.5% lower on the Nifty IT index. And that's where a bulk of the pain has been, at least in the last 4 trading sessions, that is this week. But let's look at the Nifty 50 stocks in terms of today's move. 1.1% higher on BEL, but no major moves that you can see from any of the heavyweights, and therefore points contribution extremely limited. Auto stocks were languishing, some financials in certain pockets were seeing some bit of pressure. Shriram Finance and IndusInd, which have been languishing all through the week, were also under some bit of pressure. Let's look at the sectoral heat map for the day, and within that pocket the PSU banking index stood out, but outside of that you're seeing all indices close in the red. Within the broader markets, the Nifty Realty Index was in focus. Auto down, metals down nearly 1%, IT down 0.5%. We've spoken about some of those. Broader markets, let's look at the advanced decline first off for the day, and thereafter we'll look at how the broader markets have fared. 2:1, and the breadth, which was choppy but went sharply towards the negative. Let's look at how the Nifty mid cap and small caps have done for the week. That's for the day, 0.6% lower and 0.6% lower for the day, but 2.3% lower for the week. And the Nifty small cap index 0.7% lower for the day, 3.5+% lower for the week. So pressure clearly evident, especially in broader markets.
And I'm going to go back to my colleague Harsh, because in recent days we've been closely following developments at the IndusInd Bank addressing key investor concerns. The latest update involves the National Stock Exchange placing IndusInd Bank stock under the Additional Surveillance Measure, also known as ASM Stage 1. This move is aimed at closely monitoring the stock and hence protecting investors. This decision, as we have been tracking exclusively on NDTV Profit, follows the bank's disclosure of accounting discrepancies in its derivatives portfolio, which has raised significant concerns. Now, the discrepancies could impact the bank's net worth by approximately 2.35%, leading to a sharp decline in its stock price. And additionally, there have been reports about the sale of a substantial portion of shares by the CEO and Deputy CEO 3 months prior to the stock's recent collapse. This has further heightened investor scrutiny and regulatory attention. Now, for more details, my colleague Harsh providing us additional insights into this situation. Harsh, if for our viewers, if you could just explain the ASM Stage 1 framework, what it requires investors to do and maintain, and more importantly, the implications of this. Essentially, IndusInd is under Sebi surveillance now.
Well, absolutely. So it clearly stands for Additional Surveillance Measure. It's a regulatory mechanism used by exchanges to track as well as monitor trading activities of specific securities more closely. It allows exchanges to also uphold some amount of integrity, minimize risk, and it's largely undertaken for the protection of investors. It allows a little bit of a red flag to investors that there is something wrong with this stock in terms of trust. What it entails, and this is where it starts getting more and more important. One, purchasing the stock requires 100% margin. So you can't be doing trades on margin. And mind you, this is a Nifty 50 counter which is facing this. The second is a price band of 5% will be capped. So stock can't move up or down by over 5% in a single day. That's essentially the impact of it on investors. What this will likely do, it'll only likely allow the interested real long-term investors to come in and buy the counter. because with a 100% margin requirement, you will see less traders participating in a stock like this. And given that there is a 5% cap on stock price fluctuation, that will also cap the fact that or discourage traders from entering the stock. It will reduce the speculation on the stock, and it will help regulatory authorities monitor purchases as well as sales and monitor pledged shares as well, because no pledging of shares is allowed anymore as well. So some of those measures being taken in order to try and understand till the full picture comes out, to try and cap any speculative activity as well as any pledges on stock of IndusInd Bank.
Absolutely, Harsh. Thank you so much for putting that in perspective. Essentially, 100% margin for trading IndusInd Bank shares, ensuring that speculative trading is controlled and market stability is maintained. We'll continue to track that story very closely only on NDTV Profit. Let's remember, we were the ones that broke it first, talking about the discrepancies, about the possible knowing of the management when it came to the stock price actually falling. Moving on now, the Commerce Ministry Export Council's meeting has concluded, but the Exports Council is still awaiting clarity on the issue of tariffs. So for some context, the Union Minister Piyush Goyal actually held a meeting with the Export Council today on the issue of tariffs, considering that the exporters and the community were actually a little bit hesitant after Donald Trump has come to power and has been announcing reciprocal tariffs. The topic of free trade agreements was also missing from discussions. But what were the other issues discussed? Let me quickly go across to my colleague Rishabh now, who's joining us to tell us that. Rishabh, take us through what's happened in the meeting. We understand that tariffs were not really, discussed in deep and maybe just glossed over, but give us all the details.
You're right, Sanjana. The meeting started around 4:30, ended around 7 p.m. Longish meeting. We had Piyush Goyal. He joined only for a short while, but it was attended by senior officials of the Commerce Ministry, including the Commerce Secretary as well as the Director General of Foreign Trade. Now, the two most pressing issues were sort of only glossed over to being the tariff spreads that are coming in from the U.S. as well as the FTA negotiations that are underway. We've learned that the Minister did mention of FTAs being sort of progressed upon in the coming week as well with a developing country. What we also heard was that there was continued emphasis on progressing India's exports target. We've set an ambitious target of about $2 trillion in exports by 2030. The number is expected to be, for the current year, is expected to be about 800 billion. So we need to double that and go more than that. Apart from that, export councils were urged to increase the merchandise exports, given that FY25 is concluding now very, very shortly in about 18 days. So that needs to be brought into green territory, into positive territory. That was the focus of today's meeting. And again, tariffs were sort of only glossed over, so a little bit of a disappointment on that end. We hope to hear more from the ministry on that. We will continue to keep tracking this case. We will have the February trade data that is coming out on Monday, on March 17th. That might show certain contraction, given that exporters are holding back. We are on this story, and we'll bring you more details.
Right, Rishabh, thank you so much for that. Bringing us those updates. This is the meeting between the Commerce Ministry and the Export Council that took place earlier today. Moving on, F&O investors are set to face stricter regulations, with sources indicating that Sebi may soon require traders to pass an exam before participating in F&O trading. Now, this move aims to ensure that traders possess both sufficient funds and a thorough understanding of the risks involved. Sebi has already taken steps to curb F&O volumes, issuing a circular on October 1st, 2024. Let's take you through what it said. The new regulations essentially said and included limiting weekly option expiries to 1 per exchange and requiring buyers to pay premiums upfront. These measures are designed to safeguard small investors and household wealth from significant losses. Now, I'm being joined by my colleague Charu, who will provide insights into why Sebi took this action in the first place. Charu, can you explain the reasoning behind Sebi's decision?
There is no set exam that per se we are saying is definitely going to take this. So let me revise what is happening right now. So there's a committee called the Secondary Market Advisory Committee in SEBI, which deals with the regulations regarding short selling, F&Os and all the secondary market activities. Now, what this committee is doing is that in its agenda, there is also a proposal being made to bring a suitability exercise for F&O traders. Now, what the sources are saying here is that the rationale behind this is to curb the volumes, to remove the people who are not knowledgeable enough about F&O or do not have enough funds to basically try to get them out of this sort of trading so that they do not face massive losses. So that is why something like this is on the agenda of the SEBI committee, which is likely to discuss on this. And once the proposals of the committee are accepted by the board, something around this in terms of regulations would come first in form of consultation and then in form of final regulations.
Meanwhile, the Tamil Nadu government has unveiled the logo for its 25-26 budget, replacing the Indian rupee symbol with the Tamil letter Ru, representing Rubai, the Tamil term for currency. This marks the first instance of a state rejecting the national currency symbol, a move seen as part of Tamil Nadu's broader resistance to the national education policy and the centre's three-language policy. The logo also carries the caption, "Everything for all," reflecting the DMK government's inclusive governance model. So as Tamil Nadu Finance Minister Thangam Tennarasu prepares to present the budget tomorrow, this development underscores the tension between regional identity and the national policies. My colleague Sam Daniel sent us in a report to provide further insights into what this means for Tamil Nadu's political and cultural landscape.
It's a very tricky situation to oppose this or object to this for political parties in Tamil Nadu, Kitty, because all the Tamil Nadu government has done is to replace the traditional rupee symbol with the common Tamil letter Ru, which is always prefixed in Tamil while you refer to any numerical rupee value. So nobody can find fault with that. And going with the culture of adopting Tamil in everything, the state government has done this. But so far, there is no official word yet on the story or logic or the reason behind this. But the government is on aggressively promotion mode to promote this new logo with a tagline that says "Everything for everyone." In fact, tomorrow the state government would also live stream the budget in around 100 places across Chennai and altogether 900 places across Tamil Nadu. And the BJP, of course, has responded to this so far. But otherwise, AIDMK, we understand very soon they will come back on this. But this comes at a time, besides the ongoing language row between the ruling DMK and the central government over the national education policy, particularly with reference to the three-language policy, which the DMK calls it as a ploy to impose Hindi, which the BJP